Okay, hey everyone, it's Mike Valtos. Welcome to the Orderflows market analysis for Tuesday, October 3rd, 2017. And another day, another new high. The Dow was up 0.4% to a new record at 22,641. The euro is beginning to stabilize following Catalonia's independence vote and the violence over the weekend, and sort of put an end to this week's dollar surge. On an economic data front in the U.S., vehicle sales came in at 18.6 million annualized in September, which is the strongest in 12 years. But I believe that was mostly driven by replacement demand in Houston, where there's a lot of where there was all that flooding. So I think it's going to give a major lift to consumer spending at the end of what had been a lackluster third quarter. So with that said, let's jump into the presentation. This disclaimer is something I say every day. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Tools I use in this presentation: the Orderflows Trader, the Delta Scalper, and the Price Rejector. So let's take a look. Like I said, another new high in the equities. So we'll talk about S&Ps first. Let me just get the 4-range chart. All right, so coming into the day, I remember looking at this chart and thinking, oh my God, it's just dead. But you know what? Because we're coming in here, it's 25, 29 and a half high, 25, 25 low. So you're talking about 4.5 point range. You're coming into the cash open. That's nothing. 4.5 points is nothing in the S&Ps. But when you're looking at it, you're thinking, oh, we're set for a boring day. But that's when you got to be on your toes, because it's these coming into the mornings with these tight ranges. That's when you can get some nice breakouts, right? It's easy to get lulled into thinking, oh, it's going to be a quiet day. But you know what? If this market picks up a head of steam in one direction or the other, it could get a nice move going. So, 8:35, just after the cash open, you got this Delta Scalper giving you a signal. And it followed it up right back up with a stack selling a balance. So not the best way to start your trading day. You got a signal sort of in the middle of the day's range, which is small already, and then you just get an opposite signal right after that. So just sort of walk it forward, sort of going nowhere. Instead, you're seeing a lot of imbalances. And I mean, look at this. So you got stacked imbalance, then here you got 3,000, you got 600, then you got 1,300, 1,100. 1,000, and you're seeing these deltas: 1,800, 2,400, 3,600. What's your impression? What you're thinking? You're thinking it's probably going to sell off. I remember looking at this thinking, well, there's quite a bit of selling, but at the same time, I expect that market to move lower into some new lows with that type of selling. And then you come down here, you get within 2 ticks of the low. You get down to 26. The low is 5.5. And it stops and it reverses, starts going back. I'll say going back up, but you got the up candle, kind of a small delta. At one point you had a negative delta of 22.80, but it finished up at plus 392. Then the next bar you got a bullish ratio. You got that single print, got a nice strong delta 1100, but you're right back in the middle of your value area. So are you excited? No, not really. Nothing special going on. At this point, again, you're trading in the middle of your value area. It's hard to get excited about any move at this point. What you want is something concrete. So you rally up to within a tick of your high up here at 29 and what is that? 29 and a quarter. Okay, but then what happens is you hit the upper end of your range, and the bar turns and starts coming back down into the range again. Another red candle here. You got point of controls lined up 1, 2. Is this going to be your resistance? You start trading lower, you trade back down to unchanged at 27 and a quarter. And then still a negative delta, right? 867 here, 2560 rather. On this little move up, you're thinking, hey, maybe we could break out, right? We got some nice rising deltas here. But then it hits here, it's kind of a weak delta, then negative. Okay, and you're back down into your value area. And then again here. Okay, start coming down, negative delta. I think, okay, maybe we're rejecting these high prices up here at 29 and a half. And because you see the selling coming in, but you don't really see very aggressive selling, right? You just see, one imbalance here, one imbalance there. And then what happens? you get right down to the 26 area again, and you bounce. You turn back up. You got the green candle, the up candle. You got positive delta. It's negative early, but finished positive. Going sideways here. You got a red candle. Then you got a green candle. Again, you were trading back down at 26. Now, notice what's happening here. 422, the first time you hit this. Second time, 272. Third time, 111. Okay, I think that's, to me, that's a very indicative sign that prices down here are being rejected below 25.26. There's not a lot of selling interest below that. And then what do you get here? You get the delta scalper giving you a buy. Okay, is that a go? I mean, I don't know. It's right in the middle of your value area. It's right at unchanged. And what happens is you trade back down. Instead of hitting 26, you hit 26 and a quarter. Then you get the red candle here. You got some nice volume going through here, right around unchanged at 7 and a quarter. 9,000, 8,000. Look at that delta, minus 3,400. At this point, I'm thinking, it's, even I got this delta scalper giving me a buy, right? This is kind of a difficult decision to be making here. I said, I do like that you got the declining volume when you keep hitting 26. Then you didn't hit 26 this time. I like that you got the delta scalper. But, some stuff's weighing on my mind here. You got these imbalances here. A big one here, 3,000. A huge one here, 9.5. 1173. So I got a strong negative delta. 3,000 is quite strong for a 4-range chart. I'm thinking, hey, you know what? Maybe this market is going to sell off. But again, it's right in the middle of your value area. So I'm not surprised to see, big volume there. And then we break down. We get down below 26. I'm thinking, oh shit, right? We broke down below 26. But look at this supportive volume here. 1,700 at 26, 1,400 there. Even goes offered at 5 3/4, but doesn't actually trade 5.5. Okay, so this bar is actually a bullish bar, right? I mean, the fact that we couldn't go lower and take out that low is telling me, you know what, maybe there is some supportive buying in this market. Next bar, delta scalper kicks in, right around the same level as the previous one. You see some nice, imbalance in this bar here, 25, 24, 54, 16, 22. Nice strong delta, 2,900. Again, it's coming on the back of these bars with strong negative delta. But this bar, even though it's got negative delta, looks supportive to me. It's telling me there's buyers coming in here. I mean, this is the beauty of using a footprint chart, is you can see these volumes and make that decision yourself, saying, hey, you know what? You had 1735 traded here, 1455 traded here, even when offered. Nothing traded there. Buyers came in, scooped that up, scooped this up, and start trading it higher here. That's how you analyze the order flow. Then, boom, what happens? Next bar up. Point of controls all higher from this first one. Where do you trade down? You trade down to this point of control. So if you're taking this as your swing low, the point of controls are going to be your support on this move. And you got the delta scalper as well. And what happens? Boom, you start trading up to the highs, 25, 29 and a half. Take out the highs, take out the highs, take out the highs. So you move up from, the 28 area all the way up to 32 up here. It was a slow move. It was a slow grind, granted. You're talking 11 o'clock right here up to this high at just about 3 o'clock. It's 2:45. But, there was no reason to be getting short on any point of this move up. If you had to position yourself, you'd have to position yourself long. But it's just unfortunate it's taken forever for this move. But you put it in strong volumes on this move up. I mean, look at these footprints here. You got 10,000s trading, here, 7,000, 15,000, 10,000, 14,000. And you're going up, up, up. Eventually you make some new highs, closing up on the highs of the day. So, even though the move will look nice, it was just a slow grind up there. I prefer to be quicker, but, I said, early in the day, you had that tight range. I said, don't think, oh, it's just a tight range. I'll turn off my computer and, go do something else. I mean, you can, but, yeah. You also often get explosive moves off of tight ranges, right? The whole Rebo, right? Range extension breakouts, all the Tom DeMark work, all the, Toby Crable work. Where do you get the range extension breakouts? They come after tight ranges, narrow ranges, right? Do research, look up Google on Toby Crable's work. Type in NR7 and see what all that's about, narrow range. And, that's where you get the moves from. So it's boring as heck to be sitting through a 4-point range, but it's out of those tight ranges that the big moves often come. Okay, so next up I'll talk about crude oil. There's some nice interesting things in the order flow today. So 208, you had your low here, low of the day. Some decent volume down here. FX traders say, oh, you got a pin bar, it's an automatic buy. Okay, fair enough. But anyway, we rallied up to the highs. You get up to this high, and I love these types of highs, right? Because they're great areas to short. What do I mean by these types of highs is you're sort of going up on weakening volume. Yeah, I mean weakening delta. Yes, you have a strong delta of 554 here, but then you hit your high on 18. Then you got the negative delta in the bar afterwards. Then it just sort of mixes up here. Positive 164, negative 126. Again, a strong negative 561. The sign was up in here with the delta scalper giving you the sell. But again, even if you're getting short off of this bar here, I still think it's a good area to be looking to get short. You trade some decent volume around here, around 50, 53. But you're still hanging around off this high, and I'll say off this high. I mean, at this point, you're talking about a range of 68 to 34, so a 34-point range. So again, right around the middle of your range. But still, I think it's a good opportunity, even if you didn't see this delta scalper signal up here, and you're just analyzing the delta. The fact that you hit your high on a small delta, negative delta after it overall, basically the rest of the bars. I mean, you got one positive here. These two sort of, let's say, cancel each other out, but 164, and it came right back with a negative 126. And then minus 500, again, is a great shorting opportunity, and it just sort of goes sideways before it makes the move down into new lows here, down to 24. Eventually you hit this low at 22. Just before 8 o'clock, you got a divergence, no ratio in the next bar, and you just sort of hang around. You start to rally, okay? Again, I'm not going to say there's really much signs in here in the order flow to be buying at this point, but this bar here I felt was a great buying opportunity. Sorry, excuse me. So got this cough. Point of control right towards the bottom. You got the negative delta. And why you have the negative delta? Well, you got some very strong buying in here. Look at this bottom part of this bar. 251, 387, 702, 125, even unfinished business here. 32. So it was offered here. It was bid and offered. Didn't trade on the bid side. And the buying just came right back and lifted this market up. I love this type of bar. And, I know people say unfinished business, the market's going to come back to it. Yeah, I mean, eventually it might. I don't know. I could draw a line here at 50, whatever that is, 50.38, and maybe, in the future we come back and test it, and then I could say it's unfinished business. But that's, that's not part of, how I trade. But, it's simple. Just watch the order flow. Look for areas, look for pockets of heavy volume as support or resistance. I mean, it's basic stuff. And you've seen it right there. And it's a very decent buying opportunity. Where's your stop going to be? It's going to be right around this point of control or even below the low of this bar. It's not going to be so far away. It's just going to be very tight. So you got a very limited risk on this trade. You're talking not even 10 ticks. And what's your potential? From going up from 46 all the way up. I mean, we rally up to new highs. Those are the type of trades that you want to get. Where you could rally up to and make new highs from a lowish area. So, but anyway, again, I know those unfinished business people will come out and say, oh, look, let's just draw this horizontal line here. Yeah, and traded there, right? But with unfinished business, you trade there, you're supposed to buy it. Okay, you buy it. What happens is, yeah, you do go up from it, but you spend a lot of time beneath that area. So if you're buying it here at 38, now granted, anytime you're trying to buy a pullback, you don't know where a pullback's going to stop. In this case, it got down to 30, 31. And do you want to take, I don't know where you'd be placing your stop. I mean, I can't say if you give it 10 ticks, okay, maybe, eventually would have stopped you out possibly over here, but that's 10 ticks. Eventually made new lows. So, can you use unfinished business? Yeah, you can. But, is a target where the market come back to? Yeah, and I don't think that's not how it was originally intended to be used. it was tended to be used where you pull back to that area, you hit it, and then you rally. Not you pull back through it, trade around it, and then make a rally. Okay, so this time let's take a look at the bond market here. So, also, I'll say a tighter range. I think we had a bigger range in the S&Ps this morning, but we made a low here at 522. You do have the one of the volatile indicators giving you a buy signal right on that low. Here, the previous low, you had the price rejector. You also had the divergence, but divergence by itself is not necessarily a good sign. This one's a little bit better sign, but anyway, again, it's 5 in the morning. Had you taken this buy here, it came right back with the bearish bar immediately afterwards, stops you out. Then you get another buy opportunity here. Market did make a decent little rally from 04 up to around the 12 area. Then we hit the new low. Again, now let's take a look at this low. I love this new low here for a number of reasons. One, you got the less volume. First time was 223, second time 33. I like that. You also have a divergence and a ratio. I like that. So, I've got a bunch of stuff I like going on in here. You've actually got, next bar, a bullish ratio here. The only thing I don't really have going on in here is a delta scalper signal. That would be nice to get it, but, it's conditions just aren't met. But, ratio and divergence, that's my go-to trade. That's my bread and butter trade. I talk about those every day. And here it is. Right at 754, ratio and divergence. Again, from the 04 area, where do we trade up to? We trade, boom, all the way up to the highs of the day, make new highs. You do have a 3 in a row right here with ratio. You get a pullback, but the ideal entry is between the 2 point of controls. You don't get it here, so you don't get the ideal entry off that 3 in a row. But how many other methods of trading is going to give you a trading opportunity from the low of the day, potentially to new highs of the day? Is moving averages going to give it to you? Is trading VWAP going to give it to you? No, VWAP. When you're trading VWAP, you're trading. You're looking for reversions to the mean. But order flow, you can find areas. Again, it's not about trying to pick lows of the day. No, it's not about that at all. It's about the market telling you at this low, hey, this is a buying opportunity. Okay, and what does it do? It rallies from the low all the way up to the highs. It doesn't get any better than that. You hit your high up here, what do you got? You got your divergence and you got your ratio up here on this high. You got less volume. First time was 38, second time 16. And what happens? Does it sell off back down to the lows? No, but you get a little bit of a move down from the 21 area down into the what do you want to call this? 17 area, 16 area. Eventually it did go a little bit lower, but if I see it trading like this, I'd probably be looking to get out at a few ticks. I'm not going to hold it much longer than that. Eventually it does rally back up to some new highs. But again, even if you got just one trade a day, ratio and divergence, if you got one setup to look for, ratio and divergence, you see you rallied from the low up to the high, you got the sell with the ratio and divergence up here. The second one, not as great as the first one, but okay. If anytime you get a few ticks out of the market is better than losing a few ticks out of the market. But this first one is giving you, a good 20 ticks. Okay, real quick, let's just look at 5 years. Not much going on in the order flow in the 5 years, actually. Again, you made your low here at 5 in the morning. You do have a volatile indicator giving you a buy. You get up here. I thought this bar was kind of bearish, but, it's a bar right in the middle of your value area. Then it comes back with a stack buying imbalance. Now, I like stack buying imbalances and bullish ratios afterwards. Does it rally? Well, yeah, it does. It rallies about 4 ticks. Then you got price rejector you're running into a price rejection up here. You got the bearish ratio as well, and you sell off. Again, when I see, sort of alternating buy and sell signals, to me that's a market that's going sideways more than anything. It's one thing if it's just a lot of buy signals, but you got sell signal, buy signal, sell signal, delta scalper, buy signal. It's just not shaping up. So anyway, you make the new highs. You get up here, you got the divergence, no bearish ratio or anything like that, just the divergence, and you just sort of go sideways. But this area in here, it's choppy, but honestly, when I look at, when I'm watching the market and I'm getting, conflicting signals, that's when you stay out, right? You want things, you want the conditions to be clearer, right? I mean, it was clearer in the bonds here at this low. Right, you got your less reduced volume. You've got, the ratio, you got the divergence. That was a lot clearer than what you have here in the 5 years. It's just alternate. You got this bearish bar, you got the stack buying imbalance, you got the bullish ratios, then you got bearish ratio, you got price rejector giving you a sell, delta scalper giving you a sell. You'd run right back into a bullish single print, a bullish ratio. It's don't make trading more complicated than it should be. If you're getting a lot of conflicting signals, conflicting signals, don't take any trades. Wait for things to be clearer. No one's forcing you to take a trade, right? It's up to you to take the trade or not. Alright, so thanks for watching this video. To learn more about trading with order flows, visit my website, orderflows.com. And if you're interested in the Delta Scalper, go to deltascalper.com. Be sure to subscribe to the YouTube channel as well. If you want to be updated on latest videos coming out, hit subscribe there. And there's a little bell. If you click on the little bell, you'll be notified whenever I post a new video. So thanks, everyone. Have a great day. Bye-bye.